Well, testing, 2498774000. Let me just take my headset off. Well, welcome to Mad Trading. I'm your host, Mad Trader, face for radio and a voice for silent film. As standard, you might hear the old carbonated 2-litre drinks bottle being opened time and time again. That's because I'm a thirsty little man. So if that's annoying, please let me know. As always, got any questions, stick them in the chat. I'll try and answer as best as I can. I don't need that anymore because I'm back from my high-level liquids and solids evacuation. And if you're watching this, once it's been recorded, because this is, I'm sending this out live. Doesn't look like anyone's joined on just yet. But if you are watching this recorded and you have some questions, during or after you've watched it, just send them to me here on YouTube or jump on the Telegram chat and join that and send us lots of questions there. Excuse me, I'll be happy to answer any questions that you might have as best as I can. I don't know everything. I mean, I know a lot, but I don't know everything. Anywho, let's jump straight into it. We're going to have a quick look at the current trading log. For those of you that are doing the demo forward testing, and if you are doing the live testing from a while ago, if you had taken some advice from someone else and jumped on this and you're doing this live, you'll already know the strategy. You'll already know what to do. Hopefully you've got yourself used to it by now. But anyway, only the one current open trade, and that's a FTSE short. So because it's still open, it's not a win or a loss, it's just there. Current graphs. Yes, we're up 326 on the account, 16 odd % gain. The first trade, I believe, was on the 13th of last month. So within a month, we've made 16% on a £2,000 account. Just think what that would be if that was a £20,000 account, or just think what that would be if that was an FTMO £100,000 account. What would that be monetarily speaking? Don't forget, I think sometimes people who do this FTMO stuff, don't forget, you've got to be a business. You've got to be, because you're self-employed, you're working as a contractor for FTMO, and they pay you, expecting you to do your own taxes, your own national insurance, your own pension, everything. And if you're doing it properly as a business, you're going to have to pay tax on the money that you pay yourself. So, don't be mad when someone says, "Oh, they don't pay tax on red betting." They don't. But if you work for someone else, 5%ers, or any of the other aforementioned trading schemes, then you may well have to pay tax on your gains. So anyway, if you're 5%ers, FTMO, or whatever, there's a few others that have jumped on the scene since I started. Just remember that you may well have to pay tax. Just the way it goes. And if you don't pay tax, what's wrong with you? Get off the dole. Stop claiming benefits. Pay your tax. Anyway, yeah, so we've got a 72% roughly win rate. And that might be skewed slightly in that one or two of these trades were taken early. So the profits were taken off the table. So I closed the trades early. Let's look at those now, actually, shall we? So we've got a AUD CAD short on the 4th of the 10th. Let's just look at that. AUD CAD short. So AUD CAD, where's AUD CAD short? On the, when was it? The 10th. Squeeze me. This one here, yes, no, fourth, my mistake. It's on the fourth. Where's the fourth? Second, third, fourth. So fourth. So here's the fourth there. Here's the candle. And it would have gone straight down to 261. No problem. But this is a Sunday candle. We don't care about this. Me being me, I log pretty much everything. I'm not doing it 100% on this account, as I have lots. I've got another 2 accounts that I do live trading on, which I do put most of my time and effort into. This being a demo account, it's just for you guys or anyone that wants to watch, just for you guys to see how I kind of do it. So I don't put too much information down here on the notes. But anyway, it says here nothing. But I did take partial profits. In fact, I got rid of it at break even. I think it was on the same day as well, if I'm not mistaken. Yeah, it was. So I entered down here. It went against me, as they tend to do sometimes, and it even went quite close to taking me out at a full stop up here on the 0. And as it came back down again, there's me thinking I've got 3 ever decreasing wicks and increasing in height. There's me thinking that's just not going to work out. Going to continue up and spike. And by what I mean by that is, you have 1, 2, 3 spikes in a row that are ever increasing. So the low of the spike is higher than the low of the previous spike, which is higher than the low of the previous spike. Then there's going to be a spike up, which this one would have done. And if this had spiked up past here, it would have taken me out. So when it got down to roughly break even here, there's me thinking this is going to be another spike up. This is going to be the move higher. I just got out. I should have just let it go, because it continued down to 261, didn't it? Yeah, that's on this one here. Oh no, what am I talking about? This is a fourth, isn't it? Yeah, so fourth. I don't know why. But, I did do it. Yeah, that's why, but I just didn't put it down in the log. Obviously wrong, because that will probably now continue down to at least 1-to-1, and then maybe make it down to 261. The one before that, here on the 30th of September, let's go back to that one. 30th of September, AUD short. That was a full win. Yeah, AUD CAD short, 42 points. I took partial profits. There you go. I took partial profits again. So I took it off the table too early. Should have let it go, and it would have made its 261 down here. What was the other one? Yeah, so we've got 1 or 2 partial profits removed. What was the other wedgie? That was it. Yeah, so this one here, this other AUD CAD short on the 4th, so I took 2. Yeah, that'd be why. Went on 1, took another 1, and then took them both out at roughly the same time. Oh, yeah, it was 88.26. Made a little bit, not a lot. So that's why we have a normal loser, little win, big win, little loser, normal loser, little win, no more losers. So only the one left on at the minute, and that's the FTSE short, which we can have a quick look at now. Let me get to FTSE. Where's the FTSE? Here it is. Got shouted at by someone for not taking it on this demo account, or not taking it on the strategy account, should I say. I think I was right in my assessment of it's not going to get down that. We'll never know until it either breaks the stop or continues down. But here's the candle here. We're obviously below the 200 moving average, so it's shorts only. Pop the fib on. it did go into profit, not a lot, small amount, pennies really. And now we've got a green candle for a Monday, but it's only engulfing a Tuesday, so we can't trade this. If by 10 o'clock tonight this starts to engulf the Friday candle as well, then that might be a different matter, but we're going to keep it going for now. Remember, those that are not 100% au fait yet with the strategy, have a quick look at the PDF if I sent it out to you. If not, send me a quick message on Telegram or WhatsApp, however you want to get through to me, or YouTube. If this candle engulfs the previous candle, and it's not a Sunday, so it'll be a Friday, and it's a opposite engulfing candle, then we can think about getting out the trade. In other words, if this candle today, let me zoom in, this candle today now were to spike up above here and come back down, and the close were above this candle, so this spike, this pin, needs to be above this pin, and the body of the candle needs to have engulfed the body of this Friday candle, then that would be a possible close situation. Now that just means that it's an engulfing candle. Engulfing candles tend to continue in the direction that they were engulfing, but if it's one of these, so it engulfs the body but the pin doesn't breach the top, then the next candle may continue down, but that's that's for future reference and future chats. So currently we've just got the one FTSE short open. I still don't think that's bad, if I'm honest. 16% win rate, 16% gain in a month, 72% win rate for doing virtually nothing. You're looking at the markets once or twice an evening, maybe now, maybe 10 o'clock at night, maybe early in the morning before we pop off to work or whatever it is you want to do. I don't do fizz, but if you go out for a run early morning before we drop the kids off to school, then have a quick look at the charts, or do it whilst you're dropping the kids off at school, hopefully not whilst driving. But these are the only trades that we've got for now. Let's go to the actual charts. The strategy. What what we've got to do, what we'll think of. This Thursday candle, that was a good engulfing candle to get in on. I don't know why I didn't. I don't think it's part of the normal list, is it? Part of the normal list? NZD, USD. Oh, it is there. Is that what I'm looking at? NZD, USD. Yep. I don't know why I didn't get into it. I think that would, same as every other candle, that would still continue down. And if you'd set an order for this candle on the New Zealand dollar, it wouldn't have been triggered in until today's candle anyway. So you'd have two shorts. I do think, again, that because of current market conditions and climate, that we're looking at a bounce. If you go to the weekly or even the monthly, but if you go to the weekly, you can see that there's a wick low here way back in 2020. I wonder what that was. I wonder what that down was. I wonder what that off was. Anyway, I've been sarcastic and rhetorical. I think we can all guess what that was. So I think there's going to be a bounce. I don't think it's going to make the 261. I could be wrong. It might get down to 261. Yeah, I doubt it, but it might. It might get down to 200%, and then bounce back up again. But I would have expected on the weekly for that to bounce up. And if we look at the stochastic, even though I don't use the stochastic to make trading decisions, it's a good indicator of what may or may not be on its way. We could be looking at a potential reversal from this point, and on a lower time frame, you would be looking, if you were doing a lower time frame, strategy, you would be looking for potential longs only back up to a 200. So just to give you an insight, if you wanted to, you could be looking at engulfing candles. Here's one. Engulfing candle to take it long to 261 or back up to the 200 moving average. You know, that's pretty much that's the short-term time frame trading. Monthly, we're looking at a big wick down, so that's a continuation short candle, but they don't always play out that way. Mainly they do, but they're not always. Similarly, the pin bar reversals on the upside, they don't always play out that way as well. But I would have imagined we'll have a bounce around about the 5465 point and put it back on the daily. US 500, we currently do not have an engulfing candle. Remember, we don't look for an engulfing aspect of the Sunday candle. This being the Monday candle, if this candle engulfed the Friday candle, well, we're short, then yes, so if it engulfed it short, then yes, we'd be looking for shorts. But it doesn't. We don't trade engulfing candles if they engulf the Sunday. Let me just get some liquid gold and check to see if anyone's sent any messages. Stand by. Like it. So no trade on the US 500. On the DAX, there's no trade. It's a green candle. We're only looking for shorts. We're looking for shorts on everything, basically. It's below the 200, so we're only looking for shorts. And I was trying to explain this to someone a couple of days ago. They know who they are. I'm sure they've seen one or two of my videos before. But anyway, because I have a normal job, I'm sure everyone is aware of that. I have a normal job. I've got a job that I go to, and someone within the same industry as me, who does the same job as me, was asking me, you know, how do I make money at this? How do I know when to do something? Excuse me. It's not whether you know how to do something. It's whether you've back tested something and you understand something and you are willing to let the numbers play out and play it like a casino. And I think I might have said that several times in the past. But all you look for is a certain candle. You don't. I tend not to trade these massive candles that are, you know, so big that they are the biggest ones ever. You know, they still work out sometimes, but that's not what I like to trade. I just want to trade the standard engulfing candles, and here's one right here. The high of the candle is higher than the previous candle's high. The low of the candle is lower than the previous candle's low. And the body of the current candle engulfs or is bigger or equal to the body of the previous candle. And as long as it's in the correct direction, you place a trade. Stop goes at the high, enter at the low, and let it ride. This hit the spot 261. If you're part of the demo guys, the part of the forward testing group, then you'll know why I've said the 261. I love Fibonacci. I love the ease at which 261 gets hit, and it's a magic number. It's one of those repeatable numbers in life, in fact, that you can pretty much guarantee 70 to 80% of the time in a certain situation that number is going to get hit, be it with the amount of kids you have, be it with the amount of fuel that you'll use in a certain period, and as long as the wind and the temperature are the same, the number is magical. It will get hit more often than not. But why do I not go to 300? Why do I not go to 350? Well, if I had said 350, it wouldn't have taken me out. I'd still be in that short there. I don't know why I put it on this chart. Maybe they link to my live accounts. I'm not sure. But this trade I actually took, even though it's got 500 and something odd point stop, it's still a good 1,000 odd point. Therefore, a 1,000 odd quid return. But there's the 261 that it definitely hits. Didn't hit the 350. Would have definitely hit the 300, but they don't always hit the 300. It would definitely have hit a 250, which is up here somewhere probably. But you want more than 1 to 1.5 return. 1 to 1.5 is standard. Pretty much everybody goes for 1 to 1.5. But if you go to 1 to 1.61, so 161 or 261 return, that's percentage, then you get just that little bit more. There's a bit extra squeeze coming out. And that's all you really want. You don't want to shoot for the moon on every trade. I mean, you can, if you were to look at the statistics. Let's look at it now. Look at the statistics. When we go through whether it would have hit 1 to 2, 1 to 3, 1 to 4, and we look back at this at the end of a month or 2 months. I do it quarterly on my live account, but all live accounts. But if you were to go back and look at these, and you look at the charts, you go, oh, actually, yeah, if I'd let it alone, just left it and left the stop where it was, it would have hit 1 to 2, 1 to 3, 1 to 4, and then you look at all those and say, oh, actually, 50% of these would have hit 1 to 3. That's way better than 1 to 1.61. So just let them all go to 1 to 3. If only 2 or 3 got to 1 to 4, that might still pay off all your losers. You're getting 4 times the risk. But is it really worth it? If you've got to let it run for 2 or 3 months, maybe, on a daily? And if the majority got to 1 to 2, is it less psychologically impactable? So does it do less psychological damage to you if you just set it to 1 to 2 rather than 1 to 2.61 or 1 to 1.61, which is 2.261%? I know I've just confused everybody, but I know what I mean. So if 9 out of 10 trades hit 1 to 2 risk reward, and only 7 in 10 get to 1.61 or 261%, is it not better to get the 9 that hit 1 to 2? And that's what we look at. That's after you've done the forward testing, you look back at your statistics, and statistics tell us everything. Even in business, statistics will tell us absolutely everything. Where the industry that I work in, and I know that people that know of me but don't actually know me don't know this industry, because I'm sure they don't work there. But the industry I work in should use statistics a lot more, way more. Statistically, if A happens, then B is likely to happen, and if B does happen, then C definitely will. So stop B from happening, C can't happen. Statistically, that's what's going on. So they have these guys that are looking at computers all day. They look at and observe and control certain aspects of where they are, and they have to be highly trained and quick on the mark. Sometimes not, but sometimes they've got to be really quite quick and know exactly what's happening before something drastic happens. If they can stop B from happening, C can't happen. And that's exactly this. If we can work out statistically that if we just took our profits at 1 to 2, then we're going to win more. If we let them all go to 1 to 3, well, we might only win 4 in a month. And it's still going to be a profitable trade, or a profitable trading month, but maybe it's not as much as it could have been. So statistics, excuse me, statistics tell us everything. The who, I'm going to stop waffling. He says, FTSE, we've spoke about that. We are short. Never mind. We'll see what happens. Euro USD, there's no trade. That's a Sunday. USD Japanese yen, we're looking for longs. Oh. Because we are above the 200. We're very much extended above the 200. Might I just add. We've had this. Let's just measure that. Let's just, I'm not what's the word? I'm not a guru by any stretch of the imagination. But things repeat. That's why statistics are good. And if this repeats again, you're looking at this to come down and cross the 200 sometime around about the well, it won't be on a Saturday, but sometime around about Friday or Monday of next week. And then there might be another continuation up, but that's what we're looking at. We're looking at this being the time frame for the swing. This one here did have a bit more of a swing on it, yes. And that had a major, massive swing. 78 days worth. But, we're looking at the majority of the swings. So, on a third swing, you tend to get a more violent, or third touch. Everything comes in threes, I believe. Third touch, 3 ways of thinking of things, 3 ways of hearing things, 3 truths. There's 3 ways to express yourself. There's 3 ways to teach things. There's everything comes in threes. And in trading, that's, not too dissimilar. So if we had a quite a large upswing here above the 200, then we've got a normal, standard, 58-day, 60-day swing here. We're looking at another 58-day, 60-day swing, and that'll take us to Sunday, the 16th of October. So only a few days to go. Or 6, in fact. But anyway, so it'll be next week, would it? Next Monday, week today. So that could pop up a little bit more, but then we would be looking for this 200 moving average to be up here somewhere, and then for that to come back down. So going long, what I'm trying to get at is going long right now probably is a fruitless exercise, but we trade every candle because you never know. You never know which one's going to be the big major. Oops. Look at that. It's gone to the moon and I missed it. So this would have been a engulfing candle, and we would be hoping that that would, continue on up and hit the 261. I would doubt it, but when we get down to those that are doing the forward testing demo side of life, when we get down to price action plus divergence convergence on a stochastic, we have definitive divergence coming on the stochastic only if the stochastic indicators cross. If this solid line crosses below or goes underneath this dotted line and the price is up here somewhere, then that is divergence. In other words, we have a high on the stochastic here, but a lower high on the stochastic here with a higher high on price. That is divergence. That means that stochastic is coming down, but price is going up. It's going to fall over any minute. So that's what I'm talking about. And you only know that when you've done it for God knows how long. But anyway, no trade on UJ. Pound doll hair. We were in one for the pound dollar, weren't we? We were. Shorts. Yeah, I closed it early. I was basically being a spoon, having a think about, you know what, that's not really going to work out. And I closed it down here somewhere. I didn't even get to 1 to 2. Again, looking at the stochastic and the price, and you know, NFP had come up or was coming up for end of Friday, so I think I must have done it on Friday, and some figures are coming out this week for Britain. I probably should have, looking at the figures now, I probably should have kept it short, but you know, we'll look at the figures in a second. USHF, there is no long trade available there. AUD CAD, there's no short, although this was a controversial short here on the Tuesday. This Friday was a very good short, and in fact hit its 261 target today. AUD CAD, did we have an AUD CAD? We did. And when did that fall out? That there? No. Can't remember. Anyway, that was a very good short. It's close to 200. It's not too far away. The stochastic was high. We'll get to that later. But you still take every single trade. That would have been another good one, although the wick wasn't exactly high. The body's twice the size of the body of the previous candle. Thursday. Just excuse my voice. I'm getting a bit of a man flu. I need to keep it. Need to get my vocal cords liquid. Anyway. So no trade here on AUD CAD. Oil, mental. We're gonna have to remove this from the demo side live. I think it's just too expensive to trade on the daily. Yes, most definitely on a 15-minute. And here's what I mean. Look at that massive move on the 9200. That was absolutely stonking. But even if it wasn't stonking, if we had gone short here on the 15-minute, I'm giving everything away today, just absolutely giving it away. If we'd have gone short on a 15-minute here, we're going to look for 1-to-1, and that's a 200. So enter at the 100, stop at 0. Pardon me. 2 hours later, half an hour later, so at 2:30, so that was a 2 o'clock candle. Excuse me, 2:30, you'd have made your money. Easy 100 quid. And that's it on the short term time frame. Does that make sense? Yeah. So on the 15-minute, unless you're absolutely mental or willing to be there from like 4 o'clock in the morning until 10:30 at night, constantly 1, maybe 2 trades a day tops. We obviously won't trade much before 7 o'clock in the morning, so these candles are all out. We wouldn't be trading that. We're looking for a full and proper engulfing candle. It's above the 200, so we're looking for longs. That is not, I believe, I looked at this on the lives. Yeah, it's not. So the candle, it popped up and opened up above. It's not a full engulfing candle, and the lower the time frame, the more stringent you have to be, by the way. Now we're still above the 200, so we're looking for longs. None of them there. Not that one there, because the wick is too high. Anyway, let's get to the next one that I can see, which would be too high. I can't see it now. I thought I saw it earlier. Maybe I'm looking in the wrong direction. Nope. Here it is. So 330. So 330 entry. There's the bottom, which is obviously lower than this one. There's the high. It's not exactly higher than, but it's still worthy of a go. Enter, exit, stop, 1-to-1, made your cash. It would have even gone to 1-4, so you could have made 400 quid on that, no problem. But, didn't. It even continued on up even higher. So, what I'm trying to say is, on a 15-minute, yeah, you can afford on a £2,000 account, and you can afford to take a 15-minute trade, but you can't afford to take a daily trade. this one here, let's see how much. My head's obviously going a bit That's 682 points. Even at 50 pence a point, that's £340 risk. Yeah, you would have made, it would definitely made the 261 there, but so you would have made about £500 profit on that. But the risk is too much. To put a £340 risk on one trade, your margin would have been absolutely monstrous. So I think this might be a bit too rich for a £2,000 account. So I might have to take out. Either way, there's no daily trade on oil. Russell 2000, no trade. We're only looking for shorts. It's below the 200. AUD USD. Have I not already done that one? I thought I'd done AUD USD. Oh. No trade. Shell, again, we have to take Shell out of it. I think it's just skewing the figures. Since they've changed it, it's just skewing about. Monday trading, not a great deal gone on here. Friday trading was a lot easier. There was a definite green indecision. Opens up Monday, popped up high, came down below, next candle down, and today finished looking like it might pop up, but there's nothing there. There's no definitive long or short candles coming in, even on the dailies. So I'm going to have to look at getting rid of Shell. Wall Street, America. Nothing on the daily. Just for context. This, Wall Street's another one of those ones where we might have to get rid of if it is even in the. Is it in there? Even is in the DB. No, it is not good. Yeah, so don't even bother trading Wall Street. This candle, most definitely a engulfing candle, and will more than likely continue down to 261. But even if it didn't, even at 1 to 2, you're looking at good profits, because this is a 1,651 point stop. And at £1 a point, which is the minimum I can do, that's 1,651 quid stop. And that you can't trade that on a £2,000 account. Just can't be done. Pound yen, no tradable asset. Although I did talk, if anyone was listening or had a watch of the Facebook video I did yesterday, I think I did mention that when price in the past has come down to this 200 moving average, apart from these two times, it's tended to bounce off, and even it hasn't made massive moves away, because I think that might be close to all-time highs since 2016. Forget this malarkey. Forget the 2000s boom and bust. So since 2016, this has been the highest point it's been at. And that's some freaky, or close to it. This is some freaky candles going on in September. If we look at the daily again, it kind of hit it, bounced up, but then hit it again, pierced it a little bit, and it's just been faffing around, and it looks like it's about to shoot back up again. So what to do in this situation is just wait until it is away from the 200, but not too far. Natural gas, this again is just too much. It's just too much. We don't trade this daily candle because it's only engulfing the Sunday. It's not engulfing the Friday. So no short on that. And Barrett is only because I was looking at housing stock, because I was look at that. I mean, what's this? 2020. Oh, wonder what caused that. Wonder why that happened. Well, we know why this happened down to here. But then what caused this? Look at those massive gaps We know what it was. Anyway, if you look at it, it's been going down on 9,200 cross, very profitable. It's been going down since around about January. You could even argue that it was telling us December that it's going to go down. But anyway, it's been going down since January, so this entire year. And because of what's happening in the world right now, I can't see a major return back up to the 750 point for a few months yet. Anywho, no shorting position. This is just for information on the housing market. If you were to look at, give me another housing stock. Let's go for a Red Row. Red Row PLC. Yep. Daily down. They had a small rally, I think. Well, I don't actually know why. I think it was a ridiculous rally, but there's a small rally into the 200 EMA, and then pulled away again. I wonder what happened in February and March of 2020. I wonder what that was. What else is there? We have Red Row, Barrett. I can't think of any other home development, but nope, can't. But if you were to look at them, I'm sure they will all be the same on their way down. Anyway, how long have I been waffling for? Dear God, an hour nearly. One last thing I wanted to just mention was, if you haven't already figured this out by watching someone else's YouTube videos or Facebook group or Telegram messages, do yourself a favour, get yourself onto tradingeconomics.com calendar, or go onto Google and search for a trading calendar or trading economics calendar or economic calendar. This thing will help you in understanding when not to trade. We trade every day. I trade every day that I can. If I see a candle and it's part of my strategy, I trade it. I'm not too bothered. But if I'm going, say tomorrow in Britain, where I currently reside, there is a claimant count job figures. And previous was 6.3 thousand, but the forecast is another 10,000 people are now unemployed. So let's just have a look. See, if you click on that and open up another web page, it will tell you all about it. So the number of people claiming unemployment benefit in the UK increased by 6.3 thousand in August, and they're expecting that to continue to rise, and we know why. Because you can't afford to live if you're not getting paid enough money. And it'd be easier for them, if they were on the dole. Yeah. Much more of that. There won't be any dole to give people, by the way. Anyway, so it's been, we've been getting jobs, big jobs. Lots of people getting jobs, now losing jobs. So since February, March time this year, people have been losing jobs. And if you wanted to, you could look into the why, who, where, when, how, what companies have been laying off, what companies have been thinking about taking on but can't afford it. You could go into that depth of analysis, but we don't need to. 6.3 thousand, this is coming out tomorrow, so 6.3 thousand extra people are now claiming unemployed benefits. That's all we need to know. And then also at the same time is unemployment rate. So let's open that up. And the unemployment rate has gone down, which is weird because 3.6% forecast is going to stay the same. It can't stay the same, can it? Can't stay the same. Jobless rate in the UK fell to 3.6% in 3 months to July, lowest since 1974. That's right. In the previous period compared to the market forecast. And if you look at all of this for the job vacancies and the people claiming unemployment benefits, how can unemployment be going up but jobless be going down? I wonder how that works out mathematically. Not really sure that it does. No. Anyway, conservatives would have been saying to you, oh, look at that. Since, last year we've had that. It's come down, it's come down, it's come down, it's come down. But, now we make it even less. Yeah, I think it's a fixed number. Not that this has got anything to do with politics, but I think it's a fixed number. I think it's a number that is not manipulated, wrong word. I don't want to accuse anybody of doing anything, but I think it's made up of statistics that don't take into account the real figures. Anyway. So have a look at an economics trading calendar, and if you are going, for instance, if there were a housing forecast or housing price rate, but there isn't. But if there were housing prices or housing numbers, let's say, and housing numbers had rocketed up for that year, you wouldn't want to be long housing stock, because the more houses there are, the easier it is for people to buy, therefore the less it's going to cost, therefore the less they're going to make. Prices will go down. Anyway, I'm bored of myself talking. I'm going to try and do one of these tomorrow during the day and do some live trading. I'm doing a YouTube 15-minute live account, a sesh. If anyone's interested, just jump on and I'll see you then. If you have any questions after watching this back, if anyone watches this back, give me a shout here on YouTube, WhatsApp if you've got my number, and or Telegram group, and I'll be more than happy to take you through it. Have yourselves a very happy evening. Peace out.